I know you guys are frustrated in this ever long bear market, but in this video, I'm going to share with you the top 5 altcoins I'm looking to DCA and add going into the Bitcoin halving and the next bull run. If you appreciate this type of content, smash up the likes. Don't forget to subscribe. Bitcoin continuing to struggle here, 25.6, walking towards that horrible M pattern which I shared in yesterday's video. Make sure you get caught up on that. But today we're going to focus on some altcoins, and it probably doesn't surprise my community here that we're going to kick off with the first crypto that I'm looking to continue to DCA here, and that is Phantom. You can see Phantom taking a big punishment really in this bear market. Initially it was going pretty well, then with the multi-chain hack, which of course was a bridge, not Phantom specific fault, we saw a little bit of a tumble as well. But what's been quite good about Phantom is it hasn't fallen lower than it did in that November period, right? It's not fallen lower now below the zero line than it did before. So you look here at the Fibonacci ratios, which, by the way, I explain exactly how to use jars.uk/TA if you're looking to learn a bunch of TA going into the next bull run. But you look at this golden pocket and it's sitting at $2.20 to $2.33. And so when I look at today's price, you can sit here and see a comfortable return. I mean, you're looking at a 10x just to get into your Fibonacci golden ratio, let alone previous all-time highs. You're looking at then getting back up to here at the all-time highs at around that $3.45. And then of course the Fibonacci golden extension, the 1.618 level, sitting at $5.54. So for me, continues to be an undervalued play. Yes, it's taken a battering. Yes, DeFi's taken a hit. Yes, some of their reputation is taking a hit, but it's still hugely undervalued. And that's always what alerted me to Phantom in the first place. It was the fact that they were undervalued. They went under the radar. Pound for pound, they were not being valued as some of the other projects, which we'll talk about as well. So straight up, Phantom here, got to be in my list. I'm going to continue to DCA in. Now, the other factor you've got to factor in with Phantom is the fact that this multi-chain issue could recover, right? What if they do find the funds back? What if they prove their resilience from that perspective as well? So this is all things you have to factor into your judgment when looking at Phantom. So first up, we're going to go with Phantom. Next, let's see where we're going to go. Which way we're going to go? We're going to go for Matic. Yes, Polygon Matic, the layer 2 scaling solution for Ethereum. And what's so phenomenal about this is if you take a look at Matic, its zero line is 33 cents. It's now sitting at 55 cents. This is a project that went from the zero line at 33 cents all the way to $1.40. So Matic was one of those projects which continued to deliver good results throughout last year when many altcoins were suffering. They were doing good biz dev, good partnerships with major corporates, and after the Ethereum Shanghai upgrade, they continued to prove why they were in demand. So they continued to do really well. That being said, I don't feel like the price reflecting it. It's cooled off a lot from $1.44. And remember, people were chasing at this level, this $1.48 level. People were desperate to get in when this was running to the upside. Now it's cooled off. Where's that same energy, right? And this is crypto. Crypto is all about the ebbs and flows of the market. When the market is pumping it and everybody's talking about Matic, oh, everybody wants to get in, even if it's at $1.48. But when less people are talking about it, when the momentum dies down, when nobody's talking about it, what has changed technically? What has changed from their partnership perspective? Those are the things you want to look at. And for me, the layer 2 scaling solution narrative is going to continue to be an important narrative. And that ties me into some of my other twos I'm looking to DCA, which are bonus ones. They're not going to count in my list fully, but they are 2 other layer 2 scaling solutions. We cannot ignore our good friend here, Optimism, guys. For those of you sleeping on Optimism, you have to remember base is built on this. There are many things being built on these Optimism subnets, and it seems to be the preferred kind of layer 2 scaling solution for a lot of the corporates. So definitely for me, Optimism is not one I'm going to want to sleep on. I'm going to want to have a layer 2 portion of my portfolio. Within there, you're going to have Matic. You're gonna have Optimism, which remember is still away from its its highs. Sorry, you can see here $3.28 is where it hit its highs. If you apply the Fibonacci golden extension, that brings you up to $5 per OP token. Not a bad risk to reward considering we're sitting at 1.3 right now. So about a 4x, which is not too shabby whatsoever. Then I'm going to add in another layer 2 scaling solution into that mini portfolio. And you're probably shouting at the screen right now because you already know what it is. And that's Arbitrum. Cannot sleep on Arbitrum. I've done videos on Arbitrum, which I'll link up for you guys to go watch. A very good layer 2 scaling solution, bringing in a lot of volume and bringing in a lot of revenue. This is a profitable layer 2 scaling solution. I think that's going to be important going into this next run when investors start to look for who's actually profitable, not just who's got the hype, which platforms are actually profitable out there, and definitely Arbitrum are bringing in the cash dollars, so to speak, over there with their project. So we've had that so far, okay? So now what's next? This one might take you a little bit by surprise. We have to go back up this list. Let's see if you guys guess what is going to be the next one. And the next one I'm going to be shooting for, have you got it, guys? It is Solana. Yes, we're going to go for Solana, guys. Solana, if you've not watched my video from a couple of days ago, has continued to show some strength. But I'm going to think about DCAing them very selectively. This is not one that I'm just like, yep, straight away I'm DCAing. No, I've had a roller coaster of emotions with Solana, and that's part of investing. Right? Part of investing is accepting new data and changing your methodology based on it. It cannot be that I don't believe in gold as a commodity, therefore from now to the end of time, I'm never going to buy gold. What if the landscape changes? What if the situation changes? What if the dynamic changes and gold is the go-to asset? You have to be inflexible as an investor. You have to ride the data as and when it came in. At that point, data was really bad for Solana. A lot of downtime, a lot of technical major fundamental faults. Sam Bankman-Fried, FTX, all that stuff was not great. Now we started to see, okay, they've had less downtime. Is that because of less volume in a bear market? What happens when the volume picks up? Will they start having downtime and technical difficulties again? They've also had their partnership with Visa. How does that affect things? A lot of things we need to keep an eye on. And still, whether I like it or not, Solana is still the platform after Bitcoin and Ethereum that has the adoption, right? Whether we like it or not, based on the previous bull market, Solana did have usage. It's proven its speed. It's proven its throughput. When other platforms are still relying on just their white paper or just what they're going to do or theoretical throughput, they're actually delivering. So there's a lot of people that have on-ramped onto Solana. There's a lot of people that know how to use Solana. They've been through that process. They downloaded the wallet. They know how to interact with the ecosystem. Whereas other, maybe you can even argue more exciting layer one solutions like Avalanche or Phantom or Near Protocol or Algorand, they don't have that use cases. They don't have the marketing. They've not actually really got any real tangible growth just yet. So that's part of the challenge there. So Solana continues to be on my list. I can't rule out Solana. You cannot. Like literally after Bitcoin and Ethereum, you've got to put Solana in there as a layer one solution. They're kind of a step ahead of the other ones, despite what's gone on. Doesn't mean it doesn't have its own weakness. Now I'm going to give you one more bonus theme which has just popped into my head later in this video. Again, it won't count as the 5, but I'm going to drop it in here so you guys know where my thought process is at. But we're going to move on now. In fact, let's do the Fibonacci ratio here. Solana at the 0 level was as low as $7.40, now sitting at 19 already, so comfortable 2.5x there from the lows. Fibonacci golden ratio sits at 168 to 176. That would be a phenomenal move for it to get there. Now, normally I would say it's comfortable to get in the next bull market for you to get to your golden ratio. You have to remember with Solana, the landscape is a little bit different because there's a lot of major people with huge bags who have already counted their Solana out, waiting to dump. So when this starts to do a 3x, a 4x, a 5x, there'll be a lot of sell pressure in the market, which we'll have to monitor. And the key thing for the Solana project to do is to try convince those people who counted their money as out here when it was at 740, who are waiting to dump when it has a bit of a relief rally up towards here, is to convince them to stay for the journey back towards all-time highs, and that you know, their last all-time high was nothing and they're going to continue to grow. If that's the case, then they can avert and avoid some of that sell pressure, which could allow it to gain some bullish momentum. So that's the caveat here on Solana. Of course, Solana, a project that at one point hit here at 267, and the Fibonacci golden ratio takes you up to 429. Sounds miles away from where we're at now. But again, you've got to remember, in a bull market, things do get explosive, the FOMO kicks in, and money needs to be allocated somewhere. And that's how it works. People look at the top ones, Bitcoin, ETH, and then they'll be like, what else? And they'll come across Solana and one other project, which is going to be the last one I'm going to be sharing with you before I go into my other narrative, which is Cardano. Yep, Cardano. People love to hate it. People love to say, oh, it's a ghost chain. But the reality is they've made progress. Since the last bull market, where you could argue it was just a theoretical chain, a ghost chain, no activity going on, they're starting to get some TVL. Now, of course, not as fast as people would like, but it's a bear market. What do you expect? But if they can position themselves right in this next bull market, Cardano continues to deserve a position in my portfolio as a hedge. Remember, when I add Cardano in my portfolio, it's literally the antithesis to Solana, which we just discussed. Solana, and even Phantom to an extent, is move fast, break things, and we'll fix it later. Cardano is a bit more calmer. Charles Hodgkinson, peer-reviewed academic research papers. Take our time, but do it properly, right? I want different types of projects in my portfolio. I can't have everybody just proof of work or proof of stake, or layer 2s, everything in my portfolio. No, it's got to be diversified across these different projects. And that brings me to the final narrative, which is the bonus one I'm going to be giving you. We cannot ignore proof of work. And you guys know with proof of work, there are two key plays I'm looking at. The first one is Cardano sitting here at 49 cents. Remember, this has been as high as that $28 mark. You can see here, just to get into the golden ratio, you're looking at $18 or so here on Cardano. Look, they've got a lot of work to do, but it's a scalable proof of work solution. And so is the next one, which I'm going to discuss with you, which is Casper. Yep, Casper, another proof of work play, gained a lot of attention. But again, you've got to look at the valuations of these and be careful before you add in. Casper is something that has just absolutely stormed up here to the downside. So this is definitely one I wouldn't be looking to ape in, but I'll be looking for those moments where people start to forget about it, when it really starts to pull back. And that's where I might consider having a little, proof of work section of my portfolio, where apart from Bitcoin, you've got something like Cardano or Casper, just in case this proof of stake narrative starts to tear up. Remember, you can't just have everything proof of stake, especially with Ethereum now proof of stake as well. When I look at my portfolio and I see, oh, okay, only Bitcoin is the real proof of work play, I've got to have a bit more exposure to the proof of work narrative. So I'll be looking at these. Now, if you're interested in learning a little bit more about Casper and Cardano and how they stack up versus each other, I've done a separate video on that, which I'll link up here. But if you appreciate this type of content, smash all the likes, don't forget to subscribe, and I'll see you in the next one.